Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at quantum.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis of quantum. You can't really begin discussing this company without just acknowledging that this is a knife-edge situation.
A knife-edge situation.
Yes. We are looking at a business in the middle of let's call it a very high-stakes, very necessary operational turnaround. And the financial data, well, it shows just how close they are to the wire.
Okay, so when you say close to the wire, let's really dig into that. What are the key numbers, the metrics that are making investors so nervous right now?
Right. So the first thing that jumps out is the shrinkage. The company is getting smaller.
Okay.
Q2 2025 revenue was about $60.5 million. But if you zoom out a bit and you look at the trailing 12 months, the TTM revenue, it's around $274 million.
And the problem is
that number represents a year-over-year decline of over 12%. That's a huge drop.
a revenue decline is one thing, but usually profitability is where a turnaround story lives or dies.
That's it, exactly. And this is where the story gets, well, really painful. The TTM net loss is sitting at a staggering negative $112.4 million.
Wow.
Which translates to an earnings per share loss of negative $17.99. The real problem for their survival, though, is the lack of positive free cash flow.
They're just burning cash.
Burning it incredibly fast. And when you're doing that, you just can't execute a complex turnaround without constantly needing fresh capital or some kind of extraordinary debt restructuring.
Which explains all the administrative and compliance headaches we've been seeing. It's tough to focus on growth when you're just fighting to keep the lights on.
It is. And we saw a direct result of that financial strain back in August of 2025. They filed their annual report, the 10K late.
The one required by the SEC.
That's the one. And filing that late triggered an immediate Nasdaq non-compliance notice.
For our listeners who might not know, how serious is a Nasdaq non-compliance notice? Is it just a formal warning?
Oh, it's far, far more serious than that. It puts the company on notice that they could be delisted.
Kicked off the exchange.
Exactly. And if you can't trade on a major exchange like Nasdaq, your liquidity just dries up. Institutional investors, they flee, and the company's ability to raise money is severely compromised. That risk is very high, and it's not going away until they get those filings current.
So, with that kind of crisis brewing, management had to do something drastic to shore up the balance sheet. Which brings us to that complex debt deal in September.
This is the immediate life support. In September, they struck a critical restructuring agreement. The plan is to convert $52 million of their term loans.
Which is high-interest debt.
Right. And convert it into what they're calling senior secured convertible notes.
Okay, so let's break that down. Senior secured convertible notes. What does that actually mean in plain English?
Think of it like this. The company owes lenders $52 million. They don't have the cash to pay it back. So they're offering the lenders a new kind of IOU.
Okay.
It's senior, so those lenders get paid before other debts if the company goes under. It's secured by collateral. But the most important word is convertible.
Meaning it can be converted into
company shares, stock.
So they're taking that high-interest debt off the books, which buys them time and cuts their interest payments. But the trade-off is potentially diluting all the existing shareholders later on.
That is the trade-off, precisely. It's a necessary move to survive right now, but, and this is a huge but, the entire deal requires shareholder approval.
At the annual meeting in December.
Yes. And if the shareholders vote no, if they say, we don't want to be diluted,
what happens then?
The fallout is severe. A no vote means the company faces an immediate risk of technical default on that $52 million debt. That December vote isn't just some formality, it's the whole ballgame.
That paints a really dire picture.
Yep.
And yet this stock is still getting a lot of attention. So if we look past that immediate crisis, what's the core asset? What's the reason people are still willing to bet on this?
And this is where the conversation flips, from the accounting pain to the market opportunity. Quantum is still a recognized name in enterprise storage hardware, archival software, and workflow automation.
Right.
The reason people are still interested is because of a huge, unstoppable trend. Enterprise data volumes are growing exponentially. That's not slowing down.
So if demand for storage is so high, why are their revenues dropping by 12%?
That points to an execution problem, not a product problem. The tech is still needed, they just haven't been selling it effectively. But they do have what analysts call a moderate moat.
A moderate moat? What does that look like in the real world?
It's all about institutional lock-in. especially with their archival systems. Once a huge corporation or a media house has archived petabytes of data on quantum systems, the cost and the risk of moving all of that to a competitor is just astronomical.
So it's not about having the newest, shiniest product. It's about high switching costs from these old, entrenched client relationships.
Exactly. Their clients are stickier than the revenue numbers might suggest. If they can fix the operational side and get the money sorted out, those clients provide a solid foundation.
And that potential future value must be what explains this. Frankly, this massive gap between the current stock price and what analysts are forecasting.
It is. Despite all this turmoil, the analyst sentiment is, surprisingly optimistic for a long-term recovery. We're seeing consensus 12-month price targets from $16.50 up to about $19.33.
Hold on a second. The stock is trading right now around $10.50. You're saying analysts are calling for an 84% to, 109% increase in the next year?
That is precisely the upside being projected. The ratings are a mix of hold and buy. It suggests confidence that, one, stabilization is possible, and two, their core products are just fundamentally undervalued right now.
I have to be skeptical there. Analysts can be overly promotional, right? Is it realistic to believe a target near $20 when the company might get delisted? Are they just betting on a miracle?
That's a fair point, but they aren't betting on a miracle. They're betting on the successful execution of that debt deal.
Ah, I see.
If Quantum clears that December hurdle, the immediate risk premium on the stock just collapses. The valuation would instantly snap back toward its sector averages. That 80+% upside, it's not based on some massive new growth. It's based almost entirely on risk reduction.
Understood. And that combination of massive uncertainty and massive reward, that leads directly to extreme volatility.
Absolutely. The stock's 52-week low was just $2.88. I mean, that shows you the fear. We look at its beta, which is somewhere between 2.11 and 2.67.
For listeners who don't follow beta, what does a number like 2.5 mean in practice?
It means if the S&P 500 moves up 1% in a day, Quantum is expected to move up 2.5%. But if the market drops 1%, Quantum could drop 2.5%. It's double the fun or double the pain. This is really only for risk-tolerant investors.
So let's look at the charts. What's the short-term technical picture for the next 3 months or so?
Technically, the market seems to be pricing in a wait-and-see approach ahead of that vote. We're looking at a near-term trading range between about $10 and $13.
So $13 is the ceiling for now.
That's the key resistance level, right around $12 to $13. If it can break above that, it has room to run.
And what about on the downside? Where's the support?
Support seems pretty firm near that $9 to $10 level. Right now, the momentum indicators like the RSI and MACD are basically neutral to slightly bearish.
Okay, so the RSI is around 39. What does that tell us?
An RSI below 50 like that suggests the stock is just cooling off. It's not oversold, but it's not strongly bullish either. It's consolidating, which, makes perfect sense. The market is just waiting.
Waiting for a catalyst. So for a trader listening, what's the key technical trigger to watch for?
It is that $13 level. A decisive breakout above $13, especially on high volume, would signal that the bulls are back in control. It would suggest the market is finally starting to believe in the turnaround.
And that kind of breakout would be triggered by news. What specific events are on the horizon that could push it over that line?
The catalysts are everything here. The single most important date is December 16th, 2025.
The annual shareholder meeting.
Yes. That vote on the recapitalization, the debt conversion, it is the fundamental hurdle. If that passes, a huge risk is taken off the table, and the stock should react very positively.
It's the ultimate de-risking event.
It is. Beyond that, we have the scheduled Q2 earnings release, which is pending for November 26. Investors there will be looking for concrete proof of progress on cost cutting. They want to see that the operational side of the turnaround is actually working.
And besides those scheduled dates, what about a surprise announcement? What could send this thing flying out of nowhere?
A major customer win, especially in a high-growth area like cloud or edge storage. A big partnership announcement, say with a major cloud provider, that would be instant, undeniable validation of their technology and their strategy.
Looking a bit further out, what are some of the more speculative long-term ideas floating around?
Long-term, you're looking at bigger strategic moves, maybe some M&A. Or they could become a target themselves. There's also always market chatter. Rumors.
And what are the rumors?
Well, you have to treat this as pure speculation. But there's talk of selling off certain assets if the recapitalization fails, or maybe even large-scale technology licensing deals to bring in cash. But again, that's purely a high-risk gamble.
So let's wrap this all up. When you weigh that massive 80-100% analyst upside against the very real, immediate risk of delisting, what's the final investment thesis here?
It is a highly compelling but also highly challenging risk-reward scenario. The company's place in the storage market is strong. The market needs what they sell. But the execution risk and the fragile finances mean this is really only for highly risk-tolerant investors.
So this is a bet on management, plain and simple.
It's a bet on execution. It's interesting for short-term traders playing the catalysts and for long-term investors with strong conviction. But this is not a stock you can just buy and forget about.
Ultimately, for Quantum, the next 60 days hinge entirely on the successful outcome of that December shareholder vote. That is a critical hurdle the company must clear to stabilize the balance sheet and unlock that massive potential analyst upside.